Today, we're counting down the 10 craziest stock trades. Some of the greatest trades ever made on Wall Street have inspired movies and top-selling books. These traders seem to have the intuition of a god. They went against the wisdom of their peers and made some of the craziest stock trades ever recorded in history.
Like and subscribe, or you will be cursed with bad luck for life.
No! God, please, no!
Number 1. Jesse Livermore. One of the craziest stock trades ever made was by Jesse Livermore. He was an American stock trader born on 1877 in Massachusetts to a poverty-stricken family. He was the basis to the main character of Reminiscences of a Stock Operator, a best-selling book by Edwin Lefebvre. In 1929, he came to realize that stocks had become far too speculative for them to remain steady. Using his intuition, he shorted the entire market and single-handedly caused Wall Street to crash. After the crash, he was banned from trading in Chicago in 1934, but he walked away with one of the biggest wins in history, $100 million. Number 2. Andy KRIEGER. In 1987, Andy KRIEGER was just a young 32-year-old currency trader at Bankers Trust, trying to make a name for himself. He was watching the currencies that were rising against the dollar following the Black Monday crash. With everyone buying into everything but the dollar, he was looking for currencies that had quickly become fundamentally overvalued. He found an opportunity in the New Zealand currency known as the Kiwi. KRIEGER took up a short position against the Kiwi worth hundreds of millions of dollars. His short was said to exceed the entire money supply of New Zealand, causing the Kiwi to drop sharply. The currency dropped between a 3 and 5% loss, while KRIEGER made millions for his employers. New Zealand government officials had to call up KRIEGER's bosses and threaten Bankers Trust to try to get KRIEGER out of the Kiwi. KRIEGER ended up making a massive profit of $300 million. He paid himself $3 million and changed workplaces soon after. Number 3. Paul Tudor. Perhaps one of the only people to go head-to-head with Jesse Livermore is Paul Jones Tudor. He made a similar prediction and opened a massive short on the market back in 1987. He noticed an overvaluation of stocks and was sure that the market was due for a major correction. After analyzing historic data, he and his colleagues found similarities leading up to a crash that happened in 1929. In October 1987, the stock market crashed on Black Monday with a 22% drop, and Tudor walked away with over $100 million in profit. Number 4. Louis Bacon. Louis Bacon is an American trader born in Raleigh, North Carolina in 1956. Bacon's claim to fame was figuring out international politics better than the CIA. Realizing that the Middle East was beginning to heat up with conflict, Bacon went in for an investment on oil. His knowledge of international politics ended up making his fund around $86 million within its first year. Number 5. Jim Chanos. Jim Chanos has become famous for his pessimistic outlook on the stock market, with one of his most famous quotes being, "I've seen more stocks go to zero than infinity." Chanos began working as a short seller and analyst in the 1980s. With a tendency to foresee companies fail rather than succeed, it's no surprise that he pulled off one of the greatest shorts in history. Chanos was one of the only investors to investigate Enron. Upon realizing that the stock was overvalued and underacting, he opened a short position. What followed was perhaps the most stunning company collapse and financial fraud case Wall Street has ever seen. Chanos walked away with a cool $500 million. To this day, people still remember him as a driving force behind the fall of Enron. Number 6. George Soros. Soros was known as the man who broke the Bank of England. During the 90s, Britain seemed to be doing well economically. Soros, on the other hand, noticed something wasn't quite right. Germany's mark was faring well, while Britain's pound was almost tripling its inflation. Based on his intuition, Soros opened a short position that exceeded $4 billion in total against the pound. The Bank of England, in an attempt to fight back, started to charge upward of 12% interest in loans, and other investors panicked. The bank admitted defeat, and the pound fell over 22% in one day. Soros walked away with $1 billion for his intuition, making him the winner of one of the greatest stock market trades ever made. Number 7. Stanley Druckenmiller. Druckenmiller was known for 2 of the greatest stock market trades ever made. He was one of George Soros's protégés at Quantum. Like Soros, his area of expertise was currency. Unlike his mentor Soros, he made his fortunes betting against the Deutschmark twice. Around the time the Berlin Wall fell, Druckenmiller realized that the value of the mark was way off, so he shorted the market. His first bet against the mark was done in conjunction with Soros and netted a 60% profit. When Soros broke the British pound, Druckenmiller realized that investors would flock to the mark, so he bought them up, and by the time investors followed suit, he had netted a cool $1 billion. Number 8. Kyle Bass. Kyle Bass is one of the biggest winners of the credit default swap trades that took place in 2007. Starting at Bear Stearns, Bass rose quickly to managing director at the age of 28. He then began his own firm, Hayman Capital Management LP, in 2006 with $5 million of his own money and a further $28 million from investors. The most recent Great Recession was a result of the subprime mortgage lending spate that took place during the 90s. Most people felt like it was a great time to buy a house and invest in real estate. Bass was skeptical. Upon hearing what was going on in the subprime market, he hired a team of private investigators to find out how dire the situation really was. When investigators showed him information that most borrowers would default, he began purchasing CDSs as a bet against the multi-trillion-dollar subprime mortgage market. Bass managed to convince additional investors to come on board, and the result was a near $4 billion profit for his hedge fund. Number 9. John Paulson. An unremarkable trader in 2006, no one expected Paulson to be the man who won big. All of this changed when he and his analyst, Paolo Pellegrini, started to investigate the U.S. housing market. They found many alarming signs. Paulson managed to buy $150 million worth of credit default swaps, which are basically insurance against debt. Their theory paid off so well that on some days they were making over $1 billion a day. By the end of 2007, Paulson & Co. had made $15 billion, and they had not finished. As the markets continued to collapse, Paulson made another $5 billion for the fund, and estimates put his own personal profits at $4 billion. Number 10. David Tepper. David Tepper began his financial career with an MBA and a treasury position at Republic Steel. He was recruited by Goldman Sachs in 1985 as a credit analyst, and within 6 months, he was the head trader on the high-yield desk. He left Goldman in 1992 and set up his own fund, Appaloosa Management. Tepper saw an opportunity in the 2009 financial crisis. Some of the biggest banks were on their knees. While everyone else was distracted by what was happening, Tepper saw the long game and decided to move his fund into the most dangerous market in town, banks. Tepper's fund purchased Citigroup shares at 19 cents and Bank of America at 12 cents, in addition to roughly $1 billion worth of AIG's commercial mortgage securities at 9 cents. Tepper made a staggering $7 billion. If history has shown us anything, it's that having the intuition of a Greek god, guts, and money are all you need to make hundreds of millions of dollars. All right, guys, that's it. Thank you so much for tuning in, as always. I would be so thankful if you like, comment, and subscribe. And don't forget to hit that notification bell.